Hello. So, this is it afternoon. This morning, I want to quickly bring you a brief update on I think my chat is just messed up. Okay, so I want to bring you an update and then a quick lesson that you can study and then make good use of. Okay, yeah. So let's go to chats and see what we can delineate. Um, okay, so you can see from my chat what is on my chat. Okay, so this is basically how to find entries. Okay, using range. Okay, using your range. Okay, or let me go into a little bit details using your dealing ranges. Okay, so ICT has taught us much, and then today I want to throw light on how you can also find them on um, volatility index pairs. Okay, how to find, identify the dealing ranges and how you can use them to execute your trades. All right. So a few weeks back. So this is on the 4 hour time frame. So we had price trading from an unknown area into this area. Okay, and then so let me go down to the daily, and I want to mark up some areas. So you will notice that on volatility 75, price actually traded towards this area and left a little bit of a gap in here. So this is a little bit of an advanced lesson. So if you are not a little bit advanced, you may not easily grasp the concept, but it's good for your studies. Okay, so you could see that price left a little bit of a gap here, and we're trending down. So price had actually left a lot of liquidity resting above this high, and then this high also resting in here. Okay, and this high as well. This actually gives us more room for low resistant liquidities. Okay, so price will always go and sweep the low resistant liquidities resting above the previous highs. Okay, all this area is a form of consolidation. All this area is a form of consolidation. Okay, yeah, so price was consolidating, but it was leaving some sort of liquidity, buy side liquidity resting above this high, so you notice as it left a liquidity above this high, there was an imbalance here, a little bit of gap that wasn't closed in. So as we traded down into this area, there was a signal that there was something that signaled that we're seeking for higher prices, and ultimately our goal was seeking to close in on this area. Okay, so why didn't we ultimately dash down and close in below this area that I had mentioned earlier that we're looking to close in? But as we got to this point, we saw price rally quickly up here and then it reversed. Now let's go down into why price did what it did, so that you are pre-informed on what you should be seeking for. All right, so let's see, this is our um target. Okay, this is our target. We are seeking to close in on this fair value gap. All right, now let's go down to our lower time frame, which is a 4 hour time frame. Now when we say time frame, your time frame can differ. Okay, so the time frame for me, my lower time frame for my daily analysis is my 4 hour time frame. So your time frame can either be 4 hour time frame is your higher time frame, then the lower time frame will be the time frame that precedes it, which is the 1 hour, and then the 30-15 minutes time frame. Okay, so here I'm on a daily analysis and I'm looking at the lower time frame, which is the 4 hour time frame. All right, so I'm going to be quick with it. Now when price got into this area, we saw this form of consolidation happening in here. Okay, as we were seeking for lower prices. Then what happened was that as we had this form of consolidation within this week, within that past, was the name, 3 weeks or 4 weeks ago, we saw this consolidation. What the price do? Price actually rallied down to sweep all the liquidity resting below this area. Okay, price swept the liquidity resting below this area. All right, beautifully, it swept the liquidity resting below this and this, and then it didn't stay in there, and then it rallied up. Okay, it rallied up and then it swept the liquidity resting above this area as well. So this is the consolidation. So price trades below it and then trades above it. Okay, reading the buy side and then the sell side. Now, beautifully, in as much as we have this area in view, um, the incomplete fair value gap or the not fully closed in fair value gap resting above this area inside this zone, we seek the price would have to go into this area and then close in on the fair value gap. Now you ask the question that, so what is the premise that price has to go up, seeing this form of formation here, or this form of consolidation, price reading to the sell side and then to the buy side. Okay, so beautifully, what happened is as simple as this. In as much as we have this consolidation, okay, we have this consolidation, and we are seeing that we're expecting lower prices. Okay, and price seem to have this consolidation. It raises to the sell side first and then to the buy side. When it raises to the sell side first and then to the buy side, obviously we expect a rally up. Okay, so usually after the consolidation, this is the manipulation. Okay, this is the manipulation. So right after the consolidation, we saw this manipulation. Obviously, if we manipulate, the manipulation is below the consolidation. We are seeking for more higher prices. Okay, to take down the liquidity resting. So and then as it did the manipulation to the downside, and then it rallied up, closing in above the consolidation high, closing in with a body, you see. So invariably we have what we call a shift in a structure. If it closes in with the body above it, we have a closing a shift in structure. Okay, so now one of the things that you should also put in mind is that anytime we have for instance, those of you who trade, I've taught you about market structure shift. Okay, so my mentor makes me understand that to have a very strong or what we may call a break in structure or shift in structure, we should have a body of the candle closing in above. If it is a bullish market structure shift, should have the body of the candle closing in above it. You get it? So the body of the candle shows as a clear cut sign that okay, we have a shift in structure. All right, then after a shift in structure, obviously you should know that price would ultimately retrace into an area of interest, and you can see clearly that we have an order block resting in here, and right after an order block is the fair value gap. An order block which is more valid is an order block that has a fair value gap resting above it. Okay, so beautifully you could see that this order block was the one that was used to rate or the manipulation leg. The order block in the manipulation legs are usually more valid order blocks. Okay, it has a fair value gap, and then it has the down close candle in here, and it had taken down. It was a manipulation leg, so it gives you the telltale sign that it's a strong order block. Now let me show you something on the daily time frame. Okay, so I was showing you that anytime we have low resistance liquidities, it is more obvious that anytime, so in as much as we had this low resistance liquidities, we saw this kind of setup formation, and price did this manipulation below this, sweeping this, apart from it sweeping this equal sweeping this low that we had in here, sweeping in the low that we had in here. Look at this, it had swept all this buy side liquidity resting below this areas, even on the daily time frame, and beautifully it began to push price up, and then it went up, closed in above this high, and then it rallied down into an OTE, and then boom, we saw the displacement to the upside. Okay, so now let me go back to my 4-hour time frame. So we see price doing this and comes back into the order block. So now this is a very good entry to take. Now if you go down to your smaller time frame, like the 1-hour time frame, it should give you more clear, concise entries. So you could see that on the 1-hour time frame, price traded into this particular order block resting in here. Okay, it traded into this particular order block, and couldn't close in on the fair value gap, but this traded into this. So it gives you more refined entry limit, how do you call it, minimize stop, so that your stop loss will be little. Okay, minimal optimal trade entry. Okay, now let's go back to our 4-hour time frame. Now we see, okay, so we've entered the trade. Where necessarily are we expecting price to shoot up? So in as much as we have a dealing range, we project deviations from this high to this high. Okay, so the high will be the high that was used to read the low that was used to read the consolidation, the low here, and then the high in here. So we project one standard deviation from here to here upwards. One standard deviation will give us this line that I've placed in here. Okay, so the standard deviation, all you can do is just look at the range in here. Okay, so this is it. So if you have this, okay, one standard is just the same range extended upwards. That's the standard deviation. All right, when you extend it upwards, look at where it comes in, and price trades almost into the standard deviation, and it gives you good objective for your trade. Now besides using the standard deviation, well, first of all, you can scale off. First point that you can scale off is on this high. Okay, you can take partials on this high, and then you could see the price traded into this high, and then it rallied up. There was, apart from the fact that price traded into this, there was some form of consolidation. There was some form of consolidations before price got ultimately into the area of interest. So now you notice that our focal point was actually for price to close in on this fair value gap. Okay, and price closing on this fair value gap, the necessary thing that you were supposed to do was to exit your trades in here, not wait for the standard deviation to be hit. Okay, all right. So as price closed in on this fair value gap, now watch this. Look at how the body of the candles respected the price level of the fair value gap, the higher point of the fair value gap. So price traded above it, and then what did it do? It broke below the area. It means that price had dipped below into the fair value gap again, and then it closed in on this high. Is in as much as price closed in on this high with this body, we knew that there was a shift in structure to the downside again. Now, so this is how the market is, price is usually booked. So we book price on the buy side liquidity. So when we are looking at the buy side, so for instance, if we are looking at the sell side of the market, we use the buy side of the market to do our analysis. Okay, so in so far as we have this low and this low in here, if we have this kind of formation where price had to come up and close in on this fair value gap, we are looking at price coming down to sweep the lows, sell side liquidity resting below this. Okay, now this is where you have most often your turtle soup setups. Here you can see the price actually traded almost into the how do we call it, almost into the first deviation, and then it broke down, and then it gave us a clear sign that we had shifted structure in here. Okay, we have shifted structure in here, and when we shifted structure, what happened? We retraced back and we closed in on the fair value gap, giving this particular price action here as our order block, and then this particular bearish candle here becomes the breaker. Okay, so now look at that, price trades deeply into it goes into the breaker, and you can see how it was rejected, made attempt the second time, and then it came in the third time, taking out the high resistance liquidity resting above this. Okay, so now you could see beautifully what price was doing. It took out the resistance liquidity, high resistance liquidity resting above this, and then it came to also it first of all swept the liquidity resting below this area, and then it came to sweep the liquidity resting above this area, and it was into that breaker and then into the other block, and coupled with fair value gap resting in here, and then we break down. Okay, so inside this area we have some form of how do I call it, we have some form of consolidation. Okay, and then you can find this, you can use this and this as your dealing range, because it swept both the low and then the high in an area where we're expecting price to reverse down. So now price breaks down, sweeps the low, resting in here. Okay, now let's take our fib and then project and see if we used this, the low and then the high in here. So if we use this as our range, you could see beautifully what where price actually got to, so you could have scaled off here on just on this level, which is just before this price level, but we knew that price was seeking to take down the liquidity resting below it. You could see that as the bodies of the candles traded below this bodies of this particular candle, we could see that definitely it was going to sweep, and then it did the sweep. Okay, and then what happened next? We saw that price has retraced back into this area. Why am I saying that? We see some form of fair value gaps and all that. I'm not expecting price to come in here and close in on this area. All right, so I'll explain further later why some fair value gap are not. So these are the breakaway gaps and all that. Okay, what is it that I've placed? What trade have I sell limit have I placed here? Why have I placed this trade? Okay, so beautifully, let me explain. So you could see this range now. We have price taking down the buy side liquidity resting in here and taking down the sell side liquidity resting in here. So I have this long range as my my new dealing range. Okay, now price trades back almost price trades back into 50% of the range. Okay, that's my equilibrium. So anything above equilibrium is anything above equilibrium, which is if the market is divided into two, this range, we have the premium prices and then the discount prices. So we are in premium. Okay, now price trades above 50% of our dealing range. And what are we expecting? What I'm expecting is for price to not go further, and then now let's see, after price traded into the 50% of the range we have in here, we had something that happened on the lower time frame. So let me go to this is a 1 hour time frame. Clearly you could see that there was a shift in structure in here. So price breaks down below this low, and we could see that there was a shift in structure. There was a market shift. Okay, so the structure has shifted, and then what I'm expecting is for price to trade back into this area, close in on this fair value gap, and then I'm expecting more lower prices. So this is for those of you who had watched some previous video I did on other blocks. Some of this one of the things I thought about reinforced order block is when we have such type of formation where we have the bearish candle forms before the rally up and then the breakdown. Okay, so I'm expecting price to close in on that fair value gap, and then we'll have a rally down. All right, now let me still give you more. So with this area, why did I place my trade inside this area? So if I pull my fib from this point all the way to the low, okay, I'm seeing that price is sorry, let me put this thing a little bit away from. So I'm seeing that price is coming into the 75% level of the range. Okay, so this is, if this is the range, I'm seeing the 75% level, which aligns with this particular bearish candle here, the body of the bearish candle in here, which I don't want to see price close. Although yes, the wick will do the damage, price can work into it anywhere in this level, but I don't want to see price, the body of the candle, close above the volume in here. Okay, so that's how I place my trade in here. All right, and what will be my expectation? So for instance, I've put a deviation here. I'm like, this is my first deviation, which is below this. So we have a lot of low resistance liquidity resting. We have number 1 in here, number 2 in here, number 3. So I'm expecting price to do the sweep on this liquidities resting in here, the low resistance liquidities. Now watch this. This is the second standard deviation. Where is it? It's just below, right below the low, which was used to read the the liquidity that we used, uh, the sell side liquidity that we had in here, the previous sell side liquidity. This low was the one that we used. So right below it is the standard, the second standard deviation. So for nothing at all, I'm expecting price to. So one thing is that price should also align with time. All right, and now I'm seeing that we are almost into which trading session? We are almost into the. So we are London session is already in play, and then we are going into the New York session in a couple of minutes. Okay, so it's now 11:30 my time, and it's supposed to New York's session is supposed to open at 12. Okay, so right after 12, I could see that prices actually aligning with. Sorry, I have a sore throat. Price is actually aligning with time. Okay, that's how come I've taken this entry. All right, don't overtrade your account. The only thing is just be consistent. Stick with small lot sizes. Do well on the market. That's all you need. Okay, that's all you need. So all that I have said, you can analyze it for yourself and then study, glean something from them, and I believe it will really help you. If you are new to my channel, do well and subscribe, as I'll give you more updates on volatility pairs and how you can execute your trades and how you can analyze your market using the ICT strategy. Okay, so with this, say that until we meet again, see you in the next video.